If your financial institution is like most, you're trying to find ways to make up for lost fee revenue in poor economics. But if you are like most financial institutions, you have not considered ACH a revenue generator. This presentation is designed to help you understand how essential ACH is to your ACH operations. But more importantly, we will open up the door to the most untapped revenue source for most financial institutions today. So what is ACH? Well, by definition, the Automated Clearinghouse, or ACH, refers to batch processing, store and forward system that enables electronic funds processing. But most financial institution employees or companies and individuals know ACH more commonly as direct deposit or direct payment. Direct deposit via ACH allows funds to be transmitted electronically and securely to checking accounts, savings accounts, general ledger accounts, and even loan accounts. While direct deposit is the most common ACH application, there are still many companies in the United States who are still cutting checks to other businesses, and some even have their employees get checks for payroll, pensions, dividends, and expense reimbursement. Direct payment via ACH is the use of funds for making a payment to an individual or organization. The list is endless for ways to use direct payment, but some of the most common direct payment applications include insurance payments, mortgage loans, installment loans, utility payments, and even tax payments. But has your financial institution also considered And this list could go on and on and on. Basically, any company who is depositing checks from consumers at your financial institution is a candidate for ACH services today. And let's not forget the most untapped market in ACH, business-to-business or B2B payments. These payments include cash concentration and disbursement, vendor payments between two businesses, businesses making tax payments, distributor or dealer payments, and even businesses making payments internationally. We have to remember that ACH started in the early 1970s, so it is by no means a new payment system, and statistics continue to show a steady growth in ACH applications. In 2012, there were 16,750,493,162 transactions flowing through the ACH network. This is an increase of 4.17% over 2012. And the total dollar amount of those transactions totaled $36,879,031,389, which also represents an increase over 2011. Where is all this growth coming from? Well, international ACH transactions, or IAT, were up 49.64% in 2012, and corporate transactions were up a total of 5.72%. Even traditional PPD credits like payroll saw a 5.42% increase in 2013, and traditional PPD debits like insurance payments saw a 5.42% increase over 2011. So how much can your financial institution make on ACH? The cost of ACH is so inexpensive, many financial institutions write off the cost, and they simply consider it a cost of doing business. But we would like to challenge you to think outside the box and consider ACH a revenue generator. Let's consider some of the costs that the financial institutions are charged by the Federal Reserve Bank for originating ACH transactions. The per item fee is less than 1 penny, and actually you can originate 3 ACH items for less than 1 penny. And if you include an addenda record or payment information along with that payment, you would only be charged an additional 0.0015 cents by the Federal Reserve Bank. If we look at Fed Global ACH payments fees, which is a way to get ACH payments internationally, the Federal Reserve Bank only charges the financial institution 62 cents for a transaction to Canada, 67 cents for a transaction sent to Mexico, 72 cents for ACH sent to Panama, and Latin America and Europe are a little bit more expensive, but they're still below the $5 mark. And if you wanted to utilize the Fed ACH same-day service, which allows financial institutions to originate ACH transactions that will settle on the same day that they're originated, the financial institution is only going to be charged a little bit more than traditional ACH. And if we compare that to check or wire services, you can begin to see where the financial institution is falling short if they're not making money on ACH origination. And there are long-term benefits to the financial institution as well. While ACH can generate direct revenue for your financial institution, studies have also shown that when an organization or an individual uses ACH, the loyalty to their financial institution also improves. So what's the catch? Is there risk in originating ACH? Of course, it's a payment system, but there is no more risk in the ACH network than any other payment system. And the greater the risk, the greater the reward, right? The riskier the ACH application, the more a company is willing to pay your financial institution to transmit those entries. And the Fed does not charge you any difference in price depending on standard entry class code. So what next? EPCOR has many resources for you, and we would love to help you make ACH a part of your revenue strategy in the future. Please contact EPCOR at 800-500-0100 or memserv@epcor.org, and we can help you see how you can expand your ACH services.